I think this is gold. It had a big run up. This is gold trying to stabilize, and it's actually already on the upswing. Like it's already moved down, and I think it has stabilized. And all this is short-term volatility.
All right, so let's close up on the precious metals now. We've talked about we've talked about gold in the beginning. I'm going to close off on gold again. Now, it just strikes me as gold not performing as a safe haven asset when it should have been. I mean, yes, like during a panic, like we just discussed, during a market panic, everything sells off. But at what point you would expect gold to stabilize, right? When is that going to come?
I think gold is stabilizing. It really depends on your view. I think, I mean, when we take a look at this, I think this is gold. It had a big run up. This is gold trying to stabilize, and it's actually already on the upswing. Like it's already moved down, and I think it has stabilized. And all this is short-term volatility. The thing is, gold and silver, especially the miners, they're some of the fastest moving sectors. Same with the energy stocks. They're very fast moving groups. And you have to be able to really manage your positions and your risk and your your entries and exits, because they turn on a dime and just collapse. So it's very tough. But in the grand scheme of things, this big kind of saucer shaped bottom here is gold stabilizing, and I do think it is on the upswing. It might still have some more down action over here. I think it's going to be a wild ride still for several more months. I think it's got a lot of work to do to work itself through here. I would love to see it stabilize and start to move up sooner than later.
Yeah.
But this pattern is actually showing, 1800 coming right back down to the middle range of all this noise. So I wouldn't be, hugely surprised if that happened. And this is one of the issues I think a lot of people get stuck into, is they fall in love with a specific ETF or a sector like precious metals or miners, and they feel like they always need to trade them. And the problem is you're looking to trade, so you're going to find, your brain's going to find trades to get in. And I kind of do the opposite. I sit back and I don't really care what I get into. I wait for something to set up, and then I move into it. And gold to me is a great long-term play. The miners are a great long-term play. But right now they have rolled over in the last week. You should, in my opinion, you should be in cash. I think they could go quite a bit lower still before they put in a bottom. They were starting to break out. They looked like a great trade, but it failed. I mean, it's been rejected with the panic selling. The strong dollar is driving metals lower. And I think you should be kind of waiting right now. If gold was to get down to 1800, I think that would be, for an aggressive trader, that would be a point where we're probably going to see gold bounce. If you want to get into miners, that would be an oversold level to jump into. But miners will be in a downtrend, and I don't buy stuff that's in a downtrend. I'll wait for it to reverse, turn back up, and build a bullish chart pattern. So my style is very different than a lot of others, and it's a little more, it's slower, it's more passive, much more conservative. I'm not looking to buy the blips and dips on the charts. I'm trying to catch the underlying trend and then ride it for as long as we can.
You don't think 1700 is going to happen? I've heard that from somebody. Just getting your thoughts.
It's possible. I mean, based on the analysis that we drew here with the Fibonacci extension, 1800 to me looks like the sweet spot. Okay. Just drawing a line across this chart at 1800, it's, you'll see that it was a major level here, major low. We had a bunch of wicks close to it, bunch of highs. It traded through a lot of noise. It's kind of like the middle range. If I was to put probably volume by price on here, you'd see there'd be a ton of volume through there. That's where there's going to be naturally a lot of people accumulating, adding to their positions if it dips down to that level. So I think the 1800 is a very significant one. If it goes down to 1700, I think that's going to do a lot of damage to the chart. And we really don't want it to go that low. That's getting a little low, but it's possible. But 1800 seems like it should be a pretty solid level if this 1880 doesn't hold.
Okay. All right, let's close it there. I mean, those are good thoughts. So bottom line is you think that gold is more or less stabilizing right now. I guess shorter term traders are probably wondering whether or not this decline that we've seen over the last couple of days, consecutive declines over Friday, now today, is this the bottom short term? You're saying potentially 1800 is the floor, or no?
So for short term traders, I would look at it, there's two different levels here. So we just had panic selling in the stock market. Gold has dropped right down to support around 1880 here. To me, this is a level where we're probably going to see a bounce. I wouldn't be surprised if we see gold, silver, and miners bounce for 2, 3, or 4 or 5 days. There could be a really nice bounce right here. But if it rolls over after that bounce and keeps going down, 1800 is the next really critical level to play a quick bounce or like to buy and hope it actually starts a new rally after that.